Sheila, welcome. And the risk is always that these stocks do the best on kind of the early days of a conflict like this and then, don't turn in the consistent outperformance people are looking for. Do you think they will this time?
Yeah, I don't know if you necessarily have to chase this, the strength that defense is seeing right now. I mean, I do think there are some catalysts coming up. The defense budget for fiscal 2022, which actually started in September of 21, is slated to hopefully come out in the next 2 weeks. We're expecting around a $745 billion figure or 5% growth. But what will be interesting is that the Biden administration's future year's defense budget will be out. So that means 5 years starting in fiscal 23. And right now, whispers are only for 3% growth. And when you factor in inflation, that's basically a budget that's flat at $770 billion starting in 2023. So could there be plus ups to that budget? And could these defense names actually see EPS revisions? And also bear in mind, they're trading at pretty low relative multiples to the market, as tech has had a nice ride in 21 and these names haven't been in favor. So maybe they'll catch some multiple plus ups too. But the names we really like here are LHX. It's a mid cap defense prime, as we think it could be a beneficiary from NATO spending, given its exposure to Europe at 10%, as well as GD has 10% exposure. And they're both Army oriented, where we think the spending dollars could see the biggest rate of revision upward.
That's an interesting point, because in your note, you pointed out that relatively speaking, more of the spending has gone to air and naval equipment and things like that than Army. But you see that flipping.
Yeah, I think that, a few years ago, we became more bearish on Army spending. Army spending is flat to down. But we think that's where we could see the most incremental dollars come in, whether that's for GD. Poland is requesting 250 tanks. It's a $6 billion contract that could be 3% accretive to GD's numbers pretty immediately. LHX with its ground support equipment for the Army. And then also longer term, big picture contracts like Future Vertical Lift for Textron that's competing against Lockheed on that competition. It's an $80 billion program, so pretty sizable, and that's slated to be decided in June. So I think all these could be favorable for defense spending, as people think of defense spending as space and cyber, but it's still very ground war oriented, as we're seeing in real time, unfortunately.
You pointed out that if you adjust for inflation, the proposed defense spending would be roughly flat. But do you believe that will sustain now that what we've seen go on in Ukraine has happened?
No, I think it'll certainly accelerate it. And that's where these names could get a multiple bump. They're still trading at a 20-30% discount to the market. But again, we favor some names over others on the free cash flow yield, where, as I mentioned, LHX and GD probably trade at a 7% yield versus Lockheed, or north of closer to 4. So we think this momentum could definitely continue, but in specific names.
Yeah, maybe
another group we like is the IT services names, where you have cyber orientation for the government. So the Booz Allens of the world, the Leidoses of the world.
All right, Sheila, thank you very much. I was just going to observe that defense spending may be the one area where Democrats and Republicans now will agree. Sheila Kahyaoglu, thank you very much. We appreciate your time.